Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, March 5th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Before we get to the charts here, I do want to remind you about our PivotBoss Masters live sessions next week. You can read all about it at pivotbossmasters.com/profits. If you missed our open house the other day, you can click here to rewatch the recording. And if you want to take a look at the master schedule, you can scroll down here to the schedule section and read a bit about when and what we'll be doing here next week. So please visit pivotbossmasters.com/profits. If we take a look here at the ES in the daily time frame, you'll notice that we've had one of the most significant pullbacks of the year so far. We began the year with a one-day pullback and up, multi-day narrow pullback here, a wider pullback to end January, and since this day here, which was basically the middle of February, we've had rotations downward, multiple rotations downward with lower highs and lower lows coming to pass here. That's pretty significant because we haven't seen that behavior in quite a while. But we are beginning to see signs of rejection here in the intraday time frame ahead of the RTH open. The non-farm payroll number came out much bigger than expected, and the result of that is bullish outside bars, failed new lows in the 60-minute time frames that are pretty significant and could lead to a bit more strength ahead. If price can continue to hold above 37.80 in the ES, we may see further strength to the upside based off of these rejections. Now, what we've seen here is price drop through the previous month's close and midpoint and drop into the 37.20 level yesterday. We did not fall all the way into the previous month's close just yet, but if price were to come up here to the previous month's close and fail, we may see a move into that previous month's low. So again, we're still not out of the weeds here. We've seen a pattern of lower highs and lower lows. We mentioned yesterday at the end of the day to our traders that today could be a reactionary bounce day. We could see a reaction bounce, reaction rally back up, but these rallies have been sold so far. So even if today finishes strong, will we see another round of lower highs for a move into the previous month's low next week? That's going to be something that we'll be looking out for. But here, short term, from a day time frame perspective, failed new low developing in the ES, NQ, YM 60-minute time frames with a shot to see several hours of strength throughout the day. Again, price needs to continue to hold above 37.80 from an intraday perspective, especially 775 as well. Now, if we take a look here at the NQ, you'll notice the NQ showing some strength off the lows. 12,450 is a key level to watch here early on in the day. Again, this one did bounce off the lows here. You can see a significant break at the previous month's low. Price dropped into the monthly S25 PivotBoss pivot, and we're now seeing a little bit of a bounce. This one has had the most significant weakness of any of the markets so far since the middle of February. Lower highs, lower lows throughout. Again, we reached another lower low here over the last couple of days, and while we could bounce short term, this bounce may be met with another round of selling pressure until proven otherwise. We're seeing right now a bearish Pima trigger zone develop. The 8-period average is now below the 55 and all the 3 slow-moving averages. So any bounce into that zone could be met with another round of selling pressure until proven otherwise. So right now, we have seen a clearly developed downtrend play out over the last few weeks. And the one key level that we want to continue to watch here is the 12,465s. We're right above that level right now. That's the key range top right here. We've talked about that level for some time now. If we fail to hold this zone, it will open up a rotation back to the midpoint of that key range, which is 11,570. You have a rising 200-day moving average that would be right in that zone as well. So right here, this is a very important zone. Again, any failure to hold 465 by the end of the day or moving forward could be significant in terms of market structure. So even if we do bounce, there may be another round of selling pressure that could be seen ahead that could lead price back toward the 11,570. So right now, big time market structure test here. An intraday rally here, finishing fairly strong here for the hour. And if price can continue to hold above the midpoint of this current hour, which is 12,450, we may see several hours of strength to the upside. A failure to hold 12,450 would break that idea. If we take a look now at crude oil, you'll notice crude oil is up nearly 3% today and has reached our upside target, the target we talked about to begin the first week of January. Once price was able to push through $50 on a long-term market structure level, we mentioned that the next major target above would be 65. So we're now at 65, 67. I mentioned before that if price gets into the 65 to 66 zone, that might be the end of the road for this market, at least in the near term, for strength, because that is now the upper end of the major market structure level. Again, if I point you back to the weekly time frame here, you'll see how price has pushed back through the upper zone here of this this range. So from 50 all the way up here to about 65 to 66, we are basically at the edge of that range, and each of the last several times we've been up there, we have rotated back toward 50. So usually when you reclaim that lower portion of the market structure and rally across the range, there tends to be some sort of rejection that occurs here that can bring you all the way back to 50, and then you begin to trade within that range. So while we are seeing that last bit of strength here, be on guard for a potential rejection that could bring this thing back. Sometime between 65, 66, maybe even as high as 67, we could see a move into that zone, but any significant rejection could turn the tide here, and we may then begin to see a return back toward CVPOC below, which is currently 52.50. All right, let's take a look lastly at gold futures here. You'll see with gold futures, this one is down about 0.5% right now. Again, this one is very, very heavy. It has not been able to find its footing throughout the year. Again, it has violated the 1760 support level and market structure level, and in doing so suggests a continuation towards 1660 as the next downside target. The current price right now is 1690, so we're only 30 handles off the 1660s. It appears that we will likely reach that target fairly soon, even if we were to bounce. Even if we were to see a significant bounce back towards 1760 or 1780, it could be met with another round of selling pressure, as the next downside target would then become the 1560s followed by 1525. So right now you can clearly see a downward trending bearish Pima trigger zone. You see a lower value relationship with the pivot range, a failure at market structure here, so any bounce would be met with significant overhead resistance for a continuation downward. So gold remains in a bearish downtrend, and any bounce remains a selling opportunity. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and have a fantastic weekend. I'll see you in the trading room. Take care.